Good morning, Paul Georgi from Allendale. It's June 2nd, 2010. Well, the outside markets are going to dominate the attitude of grain traders again here today. The dollar is up 45, crude is down 31, gold down about $6, and the stock market looks like we might even be a little higher here this morning. The indications are right now we could open about 30 to 40 higher in the Dow. At 8:30. Some of the major economic numbers coming out this week. We've got unemployment coming out on Friday. We've got the AP unemployment guess here coming out tomorrow. So we're going to be monitoring those items very closely. The grain markets themselves, we got the USDA released the planting progress numbers yesterday. 76% of the corn, good to excellent. That's very close to a record level for this week in time. We got 97% planted, 85% emerged, ahead of schedule on both areas. Other news this morning, China released their sales numbers for purchases from the government. This week prices are higher than last week, showing an indication again that we may have bottomed. We had about a 3% drop last week, so we've added quite a bit on. The demand is coming out of the northeast China area. Processors there have shown increased interest in corn and bid up for corn in order to get a hold of it. Other areas in China about steady with last week. Technically, corn market July contract has got support around 353, then again at 351.5. A close below that 351.5 would be negative and would more than likely hit and cause a bunch of sell stops to be activated. Resistance today, 360 on the July contract. In the soybeans, we had 74% of the beans planted, 75% is average. So we're running a little bit behind there. Could be construed as a bit friendly for the soybean complex, but soybeans, I believe, are going to be taking their lead from crude oil. Crude oil is down another 31 here this morning. Would suggest some pressure to be leveled against the soybean contract here today. Technically, we get support at 927.5 and then again at 920 in the July contract. Resistance today, look at the 943.5 area. Wheat market, we've got the crop in excellent condition. 75% of the wheat crop, winter wheat crop, is headed. There is some reports in Texas where their harvest is underway. Yields are good, quality is good, so no real positive news coming out of the wheat trade, but harvest is starting, and it looks like quality is going to be excellent. One of the problems wheat producers are talking about now is the basis is widening considerably. We've got reports of new crop wheat basis now $1 plus, which is not very encouraging to producers. When you take $1 off of the contract lows, prices get to be rather cheap. Technically today, 448 is support. 440 is the next level of support. We're dealing with contract lows there, so you're kind of drawing a line around major points that could provide some psychological support, but the market looks weak no matter how you look at it. Over in the cattle trade, we did have some cash cattle trade this week at 93 to 94 so far. There still is tight supplies of market-ready cattle, and that is causing some support to the futures market here. But the futures market is taking most of its guidance from the stock market. If we see strength in the stock market, we're going to see strength in the cattle trade. The U.S. consumer is the biggest determinant of where these cattle prices are going. The retailer is featuring beef here. We're past the holiday. We had decent movement last week with the great weather that we had throughout most of the consumer area, the metropolitan areas, I should say. So that's providing a little bit of support here to the beef market. We had cutout values up slightly in the choice, up 5 cents. Cutout in the select is up 43. A lot of that's coming from fill-in buying after the holiday clearance. Technically in the cattle, in the August cattle, we got support around $89. If we would take that out, again, a lot of stops could be hit on a closing basis, and certainly would project lower prices there. But the cash side of things looks like we can get some support in this cattle market. And our research from our research meeting yesterday, we're looking for a place to buy these cattle. Want to stand back just yet, but over the next week, look for opportunities to go along the cattle market, and just based on a seasonal possibility, also the tight supplies of market-ready cattle that we're seeing out there in the country. Stay tuned to Allendale's research, and you can listen to the Allendale research meeting from yesterday online. So check out our homepage and get the actual links to listen to that. Over in the pork, we had cut out higher yesterday for 31 cents. Packer margins are in the black. Supplies are tight of market-ready hogs. And seasonally, we should be making a bottom in here. Historically, the week after Memorial Day, we usually get a sell-off in price in the futures. And take a look at that. Look for opportunities to get long this hog market again as we go into summer. And the historical basis, as you can hear on our research meeting from yesterday, there is a high probability that we could see new highs in the hog complex sometime between now and probably the 1st of August. So stay tuned and monitor those opportunities very closely. We think there's some good opportunities to make a few dollars there. Stick with us and call our research department. We'd be happy to answer any questions that you might have. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.